like it or not, the U.S. Securities Exchange has performed astoundingly well since President Donald Trump was chosen. The S&P 500 has included $2.04 trillion in showcase esteem since Trump's decision last November through Monday, as indicated by Howard Silverblatt, senior index investigator at S&P Dow Jones Indices. The benchmark rose to a record on Monday and afterward another in early exchanging Tuesday. The record at first took off after the decision, to some extent, on any desires for a change from the disputable new president. The U.S. has one of the most elevated corporate duty rates on the planet and a diminishment of that would build up organizations' primary concerns. One of the greatest recipients from charge change would be the data innovation area, the stalwart of the U.S. Securities Exchange since November 8. A key segment of Trump's expense change design is to give organizations a chance to convey abroad benefits to the U.S. without paying the 35% U.S. corporate assessment rate. Organizations like Microsoft, Apple and Google parent Alphabet have billions of dollars stopped abroad, and a lower impose rate could boost them to take that cash back to the U.S. Tech is up almost 30% since the race, and has likewise increased the value of the S&P in the day and age, the most out of any part, S&P Dow Jones Silverblatt told CNBC in an email. Be that as it may, change trusts have vacillated as the organization has confronted a few obstacles attempting to advance its plan, incorporating into party battling. Individuals are in keep a watch-out mode as far as duty change. We get somewhat of a pop every time it gets specified, yet I think the market is in a touch of doubt, said Robert Pavlik, boss market strategist at Boston Private. All things considered, the S&P 500 is up more than 16% since November 8, with some market specialists indicating solid income development, instead of Trump, as a key impetus for the ceaseless ascent. I think this has been more essential than anything, said Mike Bailey, chief of research at FBB Capital Partners. It's been for the most part about profit. Scratch Rage, CEO of the Earnings Scout, said corporate income development came in above chronicled inclines in the primary portion of the year. Income for the S&P 500 developed by 15% in the main quarter and by more than 11% in the second quarter, Rage said. Profit development was stuck in the mud for a large portion of a year ago, succumbing to 3 straight quarters previously developing more than 9% in the final quarter. While the current year's sensational profit development may not be an immediate aftereffect of Trump's decision, it has expanded financial specialists' allure for guard stocks. The iShares U.S. Aviation and Defense ETF, ITA, has risen 30% since the decision and is up 20% in 2017 as Trump's race has elevated geopolitical strains. On September 3, North Korea directed a fruitful nuclear bomb test, about a month after Trump said the Asian nation's dangers would be met with flame and fierceness. All that stated, eminent Fence Investments director Jim Chanos said giving Trump acknowledgement for the market's rally is an extend. Instead, he noted on CNBC's Quick Money halftime report on Tuesday that values far and wide are in a synchronized positively trending market.